Are live. Good evening and welcome to the Millionaire Ladies Mob. It's Thursday at 8:30 p.m. Eastern, and that's exactly the time that we go live. I am Carmen Bernard. I want to welcome you tonight. It's an awesome show. We have some great information for you. So if you know someone, call them, tell them get on right now because they're going to miss it. And nobody needs to miss what we are going to share tonight. So I want to welcome the ladies and let them tell you a little bit about themselves. And we are going to get started. That's the time you can call somebody and tell them get on. Let's go, Saran.
Oh, I'll go first. Thank you, everybody, so much. I've been excited. I have been waiting for this episode for so long. We are going to have some real meat today. My name is Aaliyah Sherrod. You can reach me at Aaliyah 10K. And what I do is I help provide solutions to the biggest problems today in healthcare by helping thousands of families, those that are Medicare eligible, and those that have employees save money, get incredible coverage, reduce or eliminate the anxiety about surprise medical bills. And I also help protect income, eliminate debt, reduce taxes, and create a family legacy for generations. Thank you for joining us tonight. Aaliyah 10K.
Hi, Aaliyah.
Oh,
I don't know why you make it so hard for a sister to go after you, but my name is Saran Baker. I am your debt elimination queen. I specialize in assisting you with anything that has to do with eliminating your debt, reducing that interest, also creating generational wealth, getting life insurance you don't have to die to use, and much, much more. I'm also the host of Dirty Little Money Secrets on Mondays at 8:30 p.m., where you can join me on my YouTube channel. You may also download a free journal at saranbaker.co. You may download that document. It's a free manifestation journal to help you with the 5 key areas of your life: health, wealth, family, career, and relationships, and finance, of course.
oh, I
So,
like that.
so love to have you join me there. And now that Carmen's back, you can also get me at saran10k.com. Has links to everything there.
Awesome. Awesome. I'm so glad that you've dropped that journal. That's going to be a help to so many people. Please go on and get that saran10k.co.
It's saranbaker.co, but it's
Saran
also
Baker.
linked at my saran10k.com.
There you go, saranbaker.co. Go ahead and get that free journal. I am Carmen Bernard. I'm so excited tonight. This is one of my favorite topics because I like to talk about wealth and wealth in our community. And that's what we're doing tonight. We are bringing you the secrets that other ordinary people are already using because they tapped into what the wealthy people are doing. And if you want to be wealthy, you want to do what the wealthy do. I am Carmen Bernard. You can reach me at carmen10k.com. You already know I help you to protect your income, eliminate your debt in 9 years or less, including student loans, installment loans, cars, mortgage, whatever. I help you to create a tax-free retirement income stream that you cannot outlive and create a legacy of generational wealth. Awesome, awesome, awesome. Listen, I have 2 questions for you people, just 2 questions. And I'd like for you to just say yes or no or type it in the into the chat. My first question for you is, are you 100% sure that you're going to have a great retirement, or do you have some doubt? Are you 100% sure you're going to have a great retirement, or do you have some doubt? A couple of months ago, we did this. We talked about retirement and what retirement would look like for you. And was it going to be ramen or riches? Ramen or riches? I don't know, but go back and look at that. My second question for you is, what if I could show you how to get out of debt in 9 years or less, including your mortgage, including your student loans, without spending any additional money than you are currently spending Is that a conversation that you'd like to have? Please put it in the chat for us. Make sure, I think you can hear us. I see some people are already commenting. Ladies, say hello when you come in. And I want to know about those two questions. Let me tell you, this is the reality. This is the reality. The reality is that average Americans, we spend 34% of our money on interest, service and debt, 34%. We then turn around, we spend 40% on taxes. 40% on taxes. That's like uh, income taxes, state tax, sales tax, water tax, gas tax, all of these taxes. Just imagine that, right? Between interest with the bank and the government, you're basically working for them 3/4 of the time. So 9 months out of the year that you work, you're working for the government and the banks. That's what you do with your money. And then we have a measly 23% left to spend on our lifestyle. And maybe we can squeeze in about 3% of savings, right? Do you really want to continue working for the government for 4 to 5 months of the year and giving them all your money? Because that's what you're doing. Now, what if we can show you how to reduce taxes from that 40% down to 30%? And that money goes directly toward lifestyle. And then what if we can reduce your interest from 34% down to 22%? Tell me, does that sound like something you would like to have happen? So now you're really and truly working for yourself, right? 33% is now going to lifestyle. And then we can make a bigger chunk for savings. That 15% now to go to savings. Listen, if this is something that you want to know more about, put a 1 in the chat and we will contact you. I'm telling you, this is fire here tonight. All right. Here, what separates the haves from the have-nots? Knowledge. And then it's not just knowledge, right? We have to apply it. Knowledge becomes power only when we apply it, only when we put it to use. Thank you so much. Applied knowledge is power. Listen, I'm going to have my lady Aaliyah talk to you a little bit more about what I was saying. Aaliyah?
So let's talk about just a little bit the game of life. Okay. So the game of life, what happens in life? You're born, you're living, you're here. If you go to college, they're bombarding you with those credit card offers. Okay. That's debt. So you're in debt. Then once you go to you're in the debt. Then you get married. Then you get a car.
You're getting more debt.
Yeah. And then you get more debt. Then you get a house, which is more debt. Even though most of us feel it is an asset, it's still some debt to that. And then you want to go on vacation and all those credit cards. It's just, those are the things that happen. Those are the things that happen in our life. And that is for the average American, probably the average person all over the world. But why does it feel like every step that we take forward, oh my goodness, I'm taking 20 steps backwards? It feels like that. It feels like we can never get ahead. And I'm not just talking to you. I'm talking to me, because I was in this rat hole. I was in that wagon wheel, that hamster wheel.
Mm-hmm.
Total assets at the age of 65. We did some research, and you probably made about $2 million in your lifetime. If you take your salary, let's say you make what, $40,000, $50,000 a year in your lifetime, and you work, 55, not 55, maybe 45 years. You've made that money, but you've spent most of that, because at retirement, the average American has about $60,000 saved up. And that is even between the 401ks and your IRAs and your savings and things like that. We're living what we call paycheck to paycheck. And so you just want to make sure, and I'm talking to myself, you have cash flow. You got to track your money. Track your money. Put yourself, I'm not saying don't spend money. Put yourself on a budget. There are lots of things that we can do to help us budget our funds. If we make the more money, I saw an article, the more money you make, the more money you spend. Okay? That is a true, true statement. Absolutely true. What do you have to say about that, Saran? Uh-oh.
Well, to be honest with you, it kind of goes back to some of the conversations that we've had over the last couple of months. When you know where your money is coming from and where your money is going, you can control it, right? So basically, tracking your money or having a spend plan or having something set up where you know how your money is coming and going, you can control it. But when we do this in our heads, we do our budgets in our heads, and we never actually look at it on paper, we can't get a hold of it. And that becomes a challenge. Now, that doesn't mean that we're doing anything wrong. If you want something different, you have to do something different. And so with putting together a budget or a spend plan, it'll let you know where all your money is coming and where your money is going. And then you can make different decisions, right? And that's what we call like a spending plan, because this gives us an idea of like how we're utilizing our money. It tells us how long our money's going to last. It gives us a really good idea of what's going on, because most of us, 80 to 90% of us, we are just living paycheck to paycheck, like you said, Aaliyah. And when we start making more money, we don't know where it goes because we never wrote down where it was going in the first place. And so I'd like to say it was just inflation. I'd like to say it was just taxes, but the reality is you don't know where your money's going because you never knew where it was going. And what we do is we show you how to know where it's going. Because if I put the question out here similar to, what Carmen did earlier, like, do you have a spend plan? Do you have a spend plan? Or do you have a budget? Or do you have a tracking sheet? Do you write it down on a napkin with a Sharpie
Something.
and at least total it up so you can see it coming and going? I feel fortunate that I was introduced to a budget very early, and I actually have my budgets going back to 1998. I know exactly where money was going. Now, of course, there's some little things that may not always end up on the budget, but I have an idea. I can see where things were really good, where things were really bad, where things were really amazing. I can see all that, but I can see what I was spending my money on, and I can see where my money was coming from. And so that's important as well. Now, the other thing is that we have to start planning a little bit more for the unexpected. I don't know that we do enough of that. A lot of times we are just, kind of hand to mouth, if you will. And again, paycheck to paycheck. We don't know where money is coming from. But what we do with our clients is we put together a plan for the expected and the unexpected, right? We put together something for the long term and our emergency and emotional issues. What is an emergency and emotional issue, you say, Saran? Well, something that is urgent, but causing you emotional turmoil, good, bad, whatever. It could be a surprise graduation. It could be a loss of a loved one. It could be a wedding that you didn't know you was going to have to plan for one of your children or grandchildren in less than 12 months. And you're like, oh, I need some money for that. It could be you can name it, depending on who you are, it would be different. But the thing is that we have to know what that is for us. But if we don't have a plan, we just don't know, And then think about it. Some of us ladies, we come home with new clothes because they were on sale, because we are emotional buyers, not just women, all human beings. We are emotional buyers. But because we didn't have a budget, we just kind of out here, right? Now let's talk about these banks. Y'all know I like to talk about these banks. Y'all know I like to talk about these banks.
Saran, there's a question in the chat. If you want to wait for the end, or how you want to do that.
How do you help someone on a fixed income that is a head of a household? again, we would have to look at that person's specific situation, because just fixed income head of household really isn't enough information. So that, and I can't see who it is, but reach out to us, millionaireladiesmob at gmail.com, and one of us will meet with you and we'll work with you to see what kind of plan it is. You know, fixed income may mean we may need to look at the expenses and see what can change there. There are lots of different ways to finagle that. Trust and believe. I have negotiated everything on my budget, including the mortgage taxes, the taxes, property taxes on my house. So you can negotiate. It's just having someone to kind of help guide you. So,
And Saran, before you talk about the bank, here's the thing. Regardless, it doesn't matter if you were making 20,000, 30,000, 50,000, you still need a spend plan. We need to see where your money is going, because you may be on a fixed income, but your expenses might not be,
fixed.
So you still need a spend plan. Do not rule yourself out. Oh, I only make this or I only make that. Ordinary people are doing things with the strategies we are sharing. Sometimes we might have to pivot a little bit and add something. However, this is for you. We are talking to you.
Yes. And so exactly. So this spend plan is for everyone. This budget plan is for everyone, because like Carmen said, we have to know where we're going. I don't care if you make 10,000 or 100,000 or 500,000. Knowing where your money's coming and going is key. Now let's talk about the bank. I'm going to ask you a question. How would you like to be the bank? Now, Aaliyah and Carmen, y'all don't answer. Everyone who's watching us live, or if you're watching a replay, put hashtag replay. But would you like to be the bank? Would you like to be a bank? Based on what you know about banks right now, right? Would you like to be the bank?
I would.
Okay.
And you know,
most people would.
You could say, no, you can't have that. Or yes, you can. Or I'm going to charge you this interest rate. You know, I want to be the bank.
And so what we do is we teach you how to be like a bank. So let me give you a quick example, right? So if you had $10,000 and you put it in the bank may give you around 1% interest. Actually, I was looking the other day on bankrate.com. You can get a savings account now for around 1.75% if you go with SoFi Bank. And then there's some that go down to like 1.5. There was much better than the 0.25 or the 0.5 that it was before, right? So let's say 1%. We'll use that as an average. Now, the next day you walk into the same bank to borrow 10K. What interest rate do you think they're going to charge you to borrow that 10K? Well, you know, if you're watching live, drop some potential interest rates in the comments. You know, sometimes the bank could say 24%, 18%, 5%, 29%, 17%. Well, guess what? That bank is loaning out your $10,000 to someone else. That's exactly what happens. And what they do with the difference between the 1% they pay you and the up to 29% or 30% they charge someone else to borrow the money, they keep the profit in between. That's called the spread. They get that spread. You probably heard it before if you go to the casinos, you probably heard the spread before. That's the bank spread, right? And they're using your dollars to make money. Well, what we do is we work with people and we really show you how to use your money like the bank uses your money, and give all your money, give every dollar to jobs. And we create compound interest for yourself and not the bank. So now you put yourself in the position to be the one who's getting that spread on top of your money. Now, doesn't that sound phenomenal?
That sounds awesome.
I'm convinced.
I'm definitely convinced. And the thing about it.
But the next thing is that when we do this, the goal of this is to minimize the debt and to create additional wealth. And so that's where we, kind of come in. So
that's right. As Saran would say, when you listen to Dirty Money Secrets, debt-free is the new rich. She would not kid him, because when we minimize debt, we are putting that money towards growing your wealth. Here's the thing with many people is they pay off debt, but then they spend again, and they're in that cycle. We pay it off, we spend it again. We pay it off, we spend it again. What we will be showing you is how to turn that into actual wealth. Let's talk a little bit about an example, right? So I want you to use your imagination. Imagination is super, super important when we are talking about these things. You have to have it, right? But we're looking at a typical family, right? Markeisha and Jonathan. And Markeisha, we're gonna Markeisha, we're gonna call her. She's about 35 years old. Jonathan is about 37 years old. These two people want to retire when they're 65, and they right now are earning together about well, Markeisha is earning $3,125 a month, and Jonathan is earning $3,900 a month. They're thinking ahead. When it's time to retire, they want to retire with about $5,000 a month of income. Personally, guys, I know you're using your imagination, but I think that's not enough because this is how inflation is going. That's not going to be enough, but that's what they said. So we're going with that, right? They have three children, three beautiful children, ages 3, 4, and 8. They do not have any college savings. Their main area of interest is to make sure that they increase their retirement income, that they reduce that, they get that spending under control. See, spend plan. They start planning to be able to send these kids to college, and that they increase their savings. Now, let me tell you a little bit about them. I told you we put less than 3% to savings. So these people, what they have right now in an emergency account, they have about $6,000 in their emergency account. All right. And they're doing way better than many people, right? Because the average American cannot cover a $400 emergency. We're going to show you how to change that. But they have about $6,000 in that account. And in their 401k, they have about $36,000 in there. They save about $25 a month. That's what they put into their Bank of America account. And they put $300 a month into their retirement plan. It's not enough, not enough. Then they have some debt, right? They have, a Visa card. They have a medical and dental card, credit card. They don't have too much credit cards. They have one. They have some furniture that they're paying for, their car and the mortgage. All together, when they add it up, they have a total debt of, sorry, I can't see on my own notes here. They have a total debt that they're paying out each month, about $2,177 is what they're paying out. If we added up all the interest that they're spending on those things that I told you, it comes up to about an average of 10%. And this is why it's important for you to know what you are spending your money on, right? So you got to know what you're spending your money on. You also got to know what it's costing you, okay? Even more important than the actual interest rate is what it is costing you to service that debt. All right. When we add up all of their debts, they had about $180,000 in debt, right? $180,000. Now that's what when we ask them, what is your debt? They're like, oh, I have $180,000, $198. That's their debt. The actual truth of the matter is that their actual debt is $180,000, but their real debt is about $380,000 because they're going to have to pay almost $200,000 on top of their actual debt
of interest, right?
Because of interest. And I think I might have gone ahead a little bit too more, but talk to them a little bit about this real debt and imaginary debt or actual debt. Saran, tell them about it.
Well, the real deal is at the end of the day, with the real debt that we have is going to impact our long-term retirement, right? And so if you currently have a retirement plan, even with Markeisha and Jonathan, as we were talking about, you were saying right now, if they stay with the plan that they have right now, they're only going to have about $36,000. They have $36,000 in retirement right now. If they keep with the $300 contributions that you're talking about at a 5% interest rate, which, is kind of okay, in their 25% tax bracket, they're really only going to end up with about $400,000 in retirement. Now, you might be saying, because your retirement account doesn't have $400,000, and you might be like, "Oh, that's good money." Well, if they've made over $2 million in their lifetime and they want to retire on $400,000, they might be a little bit short because we're living longer. We're living 20, 30, 40 years past retirement. And so, but that $400,000 that I mentioned, is before taxes, because they saved all their retirement in a tax deferred method. And when we save it for tax deferred, that means we're going to pay tax on it at some point. And so that means that they're going to end up with around $300,000 after tax of the total amount. Mm-hmm. And so that's where it gets to be a little bit challenging, right? We want the benefits of the tax deferred account, but do you think taxes are going to be higher or lower in the future based on what you know right now? And that's okay, Aaliyah, I see you coming with, and that's the thing is, I mean, because we got to pay back a lot of these spend plans and all these wonderful benefits that we had during the CARES Act and things like that. Much needed, right? Not against it at all, because so many people needed the help. But there still has to come a time where the funds have to be recouped in some way. And typically that's through taxes. So, but Mark and Markeisha and Jonathan can change this by working with someone like the three of us, Aaliyah, Carmen, or Saran, because when we put them into our cash elimination and accumulation strategy simultaneously, what they can do is they can get out of debt in about seven and a half years. They can save on that interest. Remember that total debt versus that real debt. They're going to save about $125,000 of that interest they were going to pay with this plan. And they're freeing up some money that will now be going into their retirement accounts, which will get them to about $1 million over the rest of the time that they have to plan for retirement. So they have that much more money available to them in retirement. Now, let's be very clear. That $1 million in retirement is after tax $1 million, not pre-tax. So that really is, kind of, to give you an idea of the real nitty gritty of it. The be your own bank concept is not brand new. It's been around for years and years. And when I say years and years, I don't mean like 10 years. I don't mean like 20 years. I mean like 100 years at least. It's been around and it's been available. So, Aaliyah, talk to my people.
Oh, and this is why I get so excited. It's because I just learned about this. The less you make, the more you keep. I mean, that's taxes. Taxes are a fact of life. Yes, we're going to die and we're going to pay taxes. So we have to understand that. But would you want your taxes to be higher or lower? Okay, that's my goal. I'll pay taxes. I'm not averse to paying taxes. We need services. We need everything. But I don't want to pay high taxes. I don't want to pay, I would love to pay the Elon Musk tax and the other person taxes. I won't name the name and create that kind of stuff. But this is something that the average person can do. We can lower our taxes and make sure that we have enough money to live when we retire. Okay. If we think our taxes are going to be higher, we're just postponing the inevitable. So when I retire, and I'm thinking like, oh, I'm putting all this money away, and it's all I put it away before taxes. Well, when I start drawing it, just like you said, it's not going to be as much as I thought. Can you live on that? Mm-hmm. So you just want to make sure that if you're postponing taxes, is that a really good idea? And when should we actually start planning? Should we wait until we're, in our 60s? Should we wait until we're in our 40s? You know what? You really should start with, I'm a grandmother and I want to start with my grandkids and make sure that they are already planning. So that's what we can do. And this is so exciting to me that it just makes my heart glad because we're now really talking about it. We're getting into the meat of what we're trying to help people in our community with, and that is to have money for retirement, not spend all your money on bills, and just divert that money and get out of debt within a short period of time. Now, 7, 8, or 9 years may not seem like a short period of time, but just think about it. If you have a credit card and you're paying $20,000, or it's 20,000 or $30,000, they put that in the card. If you pay the minimum amount on this card, it'll say you'll be done paying for this in whatever year it is. Think about that. Look at that the next time you open your credit card bills. Just think about that. And then we all get these 30-year mortgages. Maybe you can get a 15-year. I don't know. But just think about all those things that the decisions that you make, and you should start early. Even if you're in your 60s, you can still start, but we encourage you to start as early as possible. And so,
Yeah.
Fran, who's next? Let's see. I think it's
So
Carmen.
yeah, so here's the thing, right? So Aaliyah, we don't want to be doom and gloom, all right, about the taxes. The truth of the matter is that we do have to pay taxes. There are things that have to happen, but we don't want to overpay in taxes. And that's what we are showing you how to do. Now, we're giving you an overview right now. We're not telling you how exactly it's going to be done. We're telling you why you should do it and what needs to be done. But if you want to find out how we can do it for your specific situation, you want to book a session with us, and then also keep looking out, because we'll have a seminar where we'll be able to go into this. You'll be able to see this live and be able to understand what is the benefit of being your own bank. For Markeisha and Jonathan, the cost of not doing this type of strategy is crazy. Saran told you they'd have $1 million in retirement. They would save $122,000, $125,000 in interest. And if we subtract what they would have made if they just stay on the same plan, they are losing over $820,000, right?
Oh.
So Aaliyah did tell you the less you pay in taxes is the more you keep. And I think Saran even said something to this effect. Matter of fact, I think it's right there. Taxes, the future tax rates, most people believe it's going to be higher, right? So if it's going to be higher, why should we postpone it? Listen, I have a business proposal for you guys. Put in there, we don't want to pay taxes. # we do not want to pay more taxes, not just taxes, more taxes than we should. But I have a business proposal for you, right? If I told you, listen, I want to go into business with you. I want you, you're going to front all of the money. You're going to put up the money. You are going to take all the risk. You'll get up from day to day and you'll do everything. You'll manage the business. 30 years from now, I'm going to tell you how much you owe me. How many of you going into business with me?
I'm getting off of this live if that's the type of business you're doing, lady. I've had enough.
Would you want to go into business with me?
That's a no. That's a no.
That's a no. And you're right. Why would you want to go into business with me? But every single day you are in that business. You're in business with the government every single day.
Wow.
Right? Every single day. When you do do the tax deferred strategy, basically what you're saying is, you know what? I don't want to pay taxes on the little bit that I have right now. I don't want to pay taxes on the seed. I want to pay taxes on the harvest. I want to give you more. So that's basically what you're saying. Listen, if
wait, when did I say that? Because is that what I'm doing?
That's what you're saying. What more you're saying is
right.
that I want to work the first 5 months of the year and I don't want any of that money. I want you to keep it, government. I want you to keep it. And then you're saying, you know what, that was not enough. I'm going to go ahead and work another 4 or so months, and I'm going to give that to the bank, right? That's what I'm going to do. So basically, if at age 45, guys, you had an IRA growth account and you put $5,000 in there, at 10% growth, you will end up with $1,250. By age 52, if you had 10,000 in there, tax savings would be 2,500. At age 59, 20,000, tax savings would be 5,000. Here's the thing. A 5,000 IRA contribution at a 25% tax bracket, the tax is going to end up equaling $10,000. So where is the savings? Where is the savings? Saran, take me into this. Tell me where it is.
Well, when you think about it, when you go through that, kind of example with the IRA, the tax deferred where you're deferring it, because if you do the Roth, you pay the taxes. But you ever ask yourself why there's a limitation on how much you can contribute to a Roth IRA?
That's it's your money, right?
It's your money and you're planning for retirement, but why am I limited? Each year the limits change of how much you can contribute to a Roth IRA. So you don't, especially if you're someone who's like, I'm gonna just go ahead and pay the taxes now, get this out the way. That way when I tap into my money, I'm not worried about paying the income tax on it, because we still have those other little sneaky taxes that we don't think about all the time, because we got grocery tax, gas tax, water tax, light bill tax, cell phone tax, went outside and breathed some air tax, walked down the street and walked the dog tax, looked at your neighbor tax. You get what I'm saying. But the thing is that we got to take a closer look at these investment strategies that we're using. There's nothing wrong with them. We still need to use our investment strategies, but we need to think more diversified and think about other ways to look at how to save our money in a place where we're not going to pay so much tax. So let's look at the same $10,000 investment that Carmen was talking about in the IRA for about 28 years. And it's going to get about 7% a working average, and the tax rate of 25%. This is what your account will be worth over time. It's going to be worth about $41,000. That's a taxable amount. 49,000 of it will be in a tax deferred. 66 will be in around a tax. 66,000 can be in a tax-free investment. The thing is that we need to be thinking about all the strategies. If we're going to do tax deferred, do tax deferred, but you need to couple it with some of the tax-free or the tax-favored ways that you have money accumulate for you for retirement and move forward, because it's clear that knowing the difference on how we move our assets is going to really be the advantage that we have. Because if I said to you, and put your money in, your $10,000 over 28 years for 7% at 25% tax rate, what would it be, right? That same $10,000 and that's what I was trying to say earlier. I got a little jumbled. If it's a taxable investment like an IRA, you're going to end up with only about $41,000 after the 25% tax. If it's a tax deferred, then you're going to end up with about $49,000. If it's tax free, you're going to end up with $66,000. Which one would you choose of the three if you could pick? And most people will probably say, well, I'm going to take 66,000. Savannah Black, right? I'll take 66,000, Alex. But the thing is that we have to, but we don't know about all these options, because we all get told the same exact thing when we start our jobs or change jobs, is to go into the same exact types of investments or saving strategies or tax plan, retirement planning. But we can change that, right? And so the big risk that we all have is don't lose your whole lifetime of work through just not really understanding what's going on. Hey, Tanya, I see you saying hey in the chat. We don't lose what your future finances could look like just because we don't understand all of our options. That's the big thing that we really have to consider. So what's your potential risk when you're planning for retirement, planning to get out of debt, raising your family, doing, all those things? Well, here are the things that are your risks. Taxes, because we don't know what they're going to be in the future. The market, depending on how you're investing and what you're doing. Inflation, I mean, that's a real thing. Just go outside and you can smell the inflation in the air.
Smell it.
Along with the rain, right? Emergencies, right? Those emotional and emergencies we talked about earlier. Disability, we've talked about that on this very same platform multiple times. We're all at risk of disability. A lawsuit, I mean, we're all at risk of a lawsuit. We don't know. Fraud, if you have a dog, you're at risk of a lawsuit. I mean, let's just keep it 100, right? Fraud, outliving your money in death. And I think, when you think about it, when we talk about retirement, one of the biggest things that we hear from our clients who are really thinking about and looking into retirement is, I don't want to outlive my money, because outliving your money could mean ramen versus riches, like we've talked about before. Outliving your money could be taking a part-time job when you're 70 or 80. Outliving your money could mean having to really depend on your children or grandchildren financially, physically, and emotionally, which none of us necessarily want to do. We want our kids to be able to live their best life and not worry about us, at least not financially. Now, physically and health-wise, that's, kind of based on your lifestyle, depending on where we all end up. But we really want to just kind of mitigate and manage these risks as much as possible. Because at the end of the day, the big picture, which is what we're trying to get you all to see, is you got to know where you're going and how you're going to get there. If I know I want to get out of debt, I want to take care of my family, but I also want to have this retirement, then we got to have a plan. If I were on my way to Florida, which I like it there, or if I were on my way to Maine or California, we could all take different ways to get there. But the thing is that you still need a map. You still need to use a vehicle, a tool to get there. You have to decide if you're going to fly, or you're going to drive, or you're going to take the plane, or you're going to walk, or you're going to run. I mean, you're going to do a Forrest Gump out here. Who knows, But you got to have, kind of that plan on how you're going to get there. Because not knowing how you're going to get there is kind of how we end up in a weird place, right? And then, something we don't always talk about. And if you're Gen X and you're watching us, or you're watching the replay, and Gen X, we're the little generation that nobody wants to talk about, because we're the first group of latchkey kids. Nobody knew where we were in the 80s. Let's just talk about that. All our movies were about adventures with kids under 10 doing God knows what. And we were really doing that in real life, right? Well, we're approaching retirement, right? We're a small little subset of, the world, but we're in that area where we can really get it together. But the big thing is, what's your definition of retirement? What's your definition of retirement, Aaliyah? What's your definition of retirement, Carmen? What's your definition of retirement, Mr. Rand? What's your definition of retirement? Those who are watching live or watching the replay, #replay. Tell us what your definition of retirement is. Tanya, I see you're there. I see a couple other people. Tell us what your definition of retirement is. Because if you don't know that, then it's hard for us to plan to help you get there. And what age do you think you want to retire? Do you think you want to have a specific plan in place to accomplish that? For me, I know I'm going to retire somewhere warm and near a beach, and that's all I'll say about that. I don't know how, and I got a plan on how I'm gonna get there, right? And I don't know how many of y'all are going to be invited to come, but I know I'm going to be at a beach. I'm going to be within walking distance of a beach, and I'm going to have me a couple dollars. But go ahead, Carmen. No, Aaliyah. Go ahead, Aaliyah.
Oh, it's me. Okay. So, you know what? We said a lot. My idea of retirement is just relaxing, doing what I want to do when I want to do it. And, that's my idea of retirement, traveling. But how do you get there? If you're in your 30s or in your 40s, you probably haven't visualized that. So what we want to talk about are the 3 phases of money. And this is really, it's simple, but it's really not, because we don't think about it enough. We don't prepare for it enough. You got to maximize your money. You got to maximize what you're doing. there are a lot of self-employed people out there, and they're making the money, but they're spending it just as fast. And maybe they're spending it on their business. Maybe they're spending it for things that are really, really needed. But you got to find out how to maximize it, and accumulation, meaning accumulate that money. You know, when you accumulate that money and you maximize what you're doing with it, at the end, you can calculate when you're going to get a distribution. And that is the thing that I was concerned about when when we first started talking about this. I'm like, wait a minute. Well, what happened to the 401k? You know, okay, I was putting the maximum, I'm putting a lot of money in my 401k. And this is all before tax. Well, I don't know what the tax bracket's going to be. So I'm like, my goodness. Because so when I start taking my distribution and I've accumulated all this money in there and I start taking my distribution, what is going to be my tax rate? That is a question we have to talk about. But we're talking about the big picture. The big picture helps us to stop arguing about money if we have a family, if we're married. We can find wasted money. When Saran talked about becoming, what was that, having less and decluttering. I started decluttering, and you know, if I just would take my time, I could probably post all the stuff that I have, you know. And I started figuring out I'm wasting a lot of money on stuff that I don't use. Like I barely watch Hulu, I barely watch PBS, but I pay for that stuff. So I started sitting down, and like in the beginning, we talked about the plan. How can we improve our cash flow? How can we increase our savings? How can we get out of debt faster than you ever thought was possible? We're going to learn how to prioritize, and we're going to help you prioritize your accounts and retire with tax favored income. That is powerful. Carmen, what do you have to say about that?
Awesomeness. I know one thing. Both of you, no matter if you know where you want to go, you're not going to jump in the car and just start heading there. If you come into Georgia, you know you want to go to Georgia. You're not going to just jump in the car and start driving there. You're going to pull out your GPS, right?
Right.
Consider us your GPS. We are there to guide you to where you want to get to with these strategies. Let's take a look. Let's kind of look back again at Markeisha and Jonathan. Remember, they had a total debt of $180, $198 when they added up their debt. To the naked eye, that's what they had. But they did not think about the $200,000 that was going to be spent on servicing that debt. So their real debt is now $380,000, right? We're talking almost $400,000 in debt. But if Markeisha and Jonathan would plan a strategy session with us, we will show them how to, and if you're Markeisha and Jonathan right now out there, you call us, we will show you, we will help you to do what we did for Markeisha and Jonathan. And that is by being the bank, by you becoming the bank, you are now free from lenders in 7.8 years. You have now saved over $123,000 in interest. You saved that. You freed up $2,177 a month that you can now put toward retirement. Remember earlier when I spoke, I said a lot of us do pay off debt. How many of you have paid off that credit card down to zero? And then
I raise my hand.
You're back in debt. We are going to use these tools to put you on that path. You could still do things. We're not saying you can't buy stuff. You can still go on vacation. You can still purchase a new car. You can still buy that new boat if that's how your boat floats. You can still do all of those things. But at the end, you're still in the end of 30 years, you're going to have enough money to retire. And when I say, hey, do you have Do you think that you're going to have a great retirement, or do you have some doubt? How will you answer, Saran?
I am so excited to start this program. I don't even know what it is yet because I had some doubt about my retirement and I want to be down. That's how I respond. No,
Right?
seriously. But you know what? Most people will hear this conversation or see a presentation like this and think, and make a decision immediately. Say, you know what? I need to book with those ladies, one of those ladies right away. I need to figure out what happens. The question is, if you're able to watch live or you're watching the replay, would that include you? If that's you, take action now. Don't keep scrolling, because now is the time. This is coming to your life for a specific reason right now today, because it's time for you to take that next step and to move forward to get things done. At the end of the day, we are all responsible for our own financial futures. And Aaliyah mentioned it, like, what about the 401k? 401ks didn't exist 60 years ago because our companies paid 100% pension. And then they realized it was too expensive for them to keep paying for someone the rest of their lives. And then people started living longer. So they came up with this fancy program called 401k. I ain't knocking it, but there's a whole book out called 401 Chaos. Check it out. It's chaotic out there in the streets, right? But the thing is that even if you do the max in one of those accounts, you may not be able to have a full retirement. It's about having that three-legged stool, or four-legged stool for retirement, having free money, tax-deferred money, tax-favored money, having a way to have some other income coming in. And we didn't even mention the S word, SSI. That may be out there. But the thing is that what you want to depend on, even though it is your money? But the catch-22 is this, and we'll probably make a post about this in the next week, but up to 80% of your Social Security could be taxable if you go out and get a part-time job. How do you win that way and you're retired? So the things that we talked to you about today is we talked about getting you some knowledge that you can apply. We talked to you about ways that you can improve your cash flow in order to reduce your debt, right? And someone, Facebook user comment, you can't depend on SSI. You can't, even though it's your money. So we talked to you about reducing debt. We talked to you about reducing some of those taxes and doing a little strategic thing. And all this is legal because I do not go to jail. I like it on the outside. Trust me. Right? And minimizing your risks. And really just taking a look at the big picture, looking at your big picture a little bit closer, understanding, and Aaliyah said it, and we've talked about budgets, many, many times, and we're going to keep talking about them, right? Because these are some of the tools that help us to pivot into a new direction. If just sitting with one of us just to do a budget or a spend plan will help you get on the right track, that's what you need to be doing. You need to be emailing us at millionaireladiesmob@gmail.com to set up an appointment, or going to one of our websites, Saran 10K, Aaliyah 10K, Carmen10K.com, and setting up a direct appointment with one of us so that we can get you on the right track, get you on the right road, get you the map, get you that tap into that GPS. When we first got cars back in the day, not to age myself, because I am 25. When you got a car, you had to get a map too. You had to get that big atlas. You had to have one in the car with you.
Thomas guy
that you lived in, and God forbid you needed to go from state to state. You needed like 3 or 4 of them jokers. Yeah. Well, we're that map. Now that stuff is on your phone or in your car. Well, we're here on your phone or in your car right now. we're the map. We're your virtual map to get you there financially. So it's your decision, but I'll hand it over.
Yes. Listen, here it is. A goal without a plan is just a wish. A goal without a plan is just a wish. And so I want you to understand something, right? You're sitting there, you're like, I don't know if this applies to me. I don't know. I want to know more. I want to know more information. There's some people that they take their car to get it fixed, and the mechanic tries to tell them all of the things that's wrong with the car, and they're like, listen, I don't care about that, just fix it, right? Think of us as your mechanics, right? If just come to us. But then there's some people who says, I want to know more. We can service both of those people. I want you to understand the crux of being your own bank. And in order to do that, I need you to understand this concept, right? You must understand that you finance everything that you buy. You finance everything that you buy. You either pay interest to some entity or you give up the interest that you could have earned.
Oh,
right?
yeah, I like that. Oh, that was
I
fire.
like-
Say that again.
Yeah, you finance everything. You either pay that interest to an entity or you give up the interest that could have been earned. So this is what I run into sometimes, right? People say, I don't have to pay. I don't go into debt. I have no debt. I don't do debt. I save my money. And then when I want something, I buy it. So I'm a saver. I want to tell you tonight, Mr. Saver, Mrs. Savior, you and the spender are the same exact people. It's two things of the same coin. How do I say that? Two
Polar. It's polar opposite. It's on the same plane, but they're polar
two
opposite.
sides, right, of the same coin. Let me explain. As a spender, right? As a spender, you go out, you purchase something, and then you pay it back little by little. I want you to imagine this. I told you imagination is critical in this thing. So I want you to imagine a line right here. This is a line of zero. And as a spender, you go out and you purchase something. So you come down 30,000 from that line of zero. Now you pay back with interest little by little by little by little until you paid it off. Where are you? Right at the line of zero. Now here's the saver. The saver is here, and this saver does what? They save up, save a little, save a little, save a little. Now they're at 30,000. And when they purchase something for the 30,000, now they boom right back down to the line of zero. And now the debtor and the saver, you are both the same people. Well, you might say, Carmen, then what do I do? You have to become a wealth creator. Let me tell you how you do that. To become a wealth creator, you have to think of a new concept. Yes, you are still saving. You are still saving. But now when you're saving, you're leaving that money in there. You get the 30,000, you need to purchase something, you're going to go purchase something, but you're not going to touch that account. That becomes a private reserve account. It's your private reserve account. It's your bank. You are not going to touch it. What you are going to do is you're going to collateralize it. You're going to use some other people's money. You're going to say, hey, let me borrow 30,000 because I need to go buy something. But I want you to keep my collateral over here, my account over here. Use that as knowing that you're going to get paid back in the future. So they're like, oh, cool. You got that. You good with us. And they give it to you. They don't go asking for your credit. They don't go telling you to show me how you're going to pay it back. They don't do any of those things. They just gave you that 30,000 to go buy whatever you want. And that 30,000 now is uninterrupted, continues to grow interest uninterrupted, and you get your stuff. Now you're going to be like any good banker, any honest banker, and you're going to pay that money back. And now what is happening? You have given that $1 2 jobs. The spender and the saver, you only had it doing one thing. You either had it saving or you had it, you were spending it, right? Now you are being able to save your money and let it continue to compound. Guys, if you do not understand or know how compound interest works, you've got to go look at it. It's phenomenal. It's phenomenal. I'm telling you, it's where I could say to you, hey, would you want me to give you $1 million today? or would you want me to give you a penny doubled for the next 30 days? If you do not know, you might say, give me my $1 million. But I'm going to tell you right now, a penny doubled for the next 30 days is over $5 million. You would have been given up so much. That's the same exact way it works. When you start early and you start to build up that compounding, right? Y'all, I'm gonna give you a crazy scenario about compounding. You know what was compounding? One case of COVID was found in California in January or February of 2020. One case. How many cases of COVID did we get within about 5-6 months? That's compounding, because one person can give it to 4 or 5 people, and then those 4 or 5 people could give it to 20 people, and those 20 people could give it to, and that's how compounding works. I'm sorry to use that, but I need something to get this over to you. Hashtag compounding is the ish. So now when you do that, you're giving your dollar at least to work at least 2 times. I'm gonna tell you right now, it's more than 2 times, but I don't want to overwhelm you. I don't want to overwhelm you. You're at least giving it. Here's my girl. She told you compound interest is the 8th wonder of the world. Who said that again? Was it Ben Franklin? Who said it?
Somebody smart and old.
Somebody smarter than us, but we don't care. We don't care who said it. We just know it works, and we want to share it with you. So now you are not the debtor. You are not the saver, but you have become the wealth creator. I'm Carmen Bernard, and you can reach me at carmen10k.com. And let my sisters give a little outro about themselves.
Yeah, we're a little over, so I'll be quick. This is Aaliyah Sherrod. You can reach me at Aaliyah10K. This has been wonderful. This has been eye-opening, and I hope you guys reach out to us when we ask for that personalized information, because we're gonna make sure that we have the big picture and you see the big picture. We're gonna need some information from you. Reach us at millionaireladiesmob@gmail.com.
Yes, I love that. And then, I'm Saran Baker. You can reach me at saran10k.com. But let me answer some questions for you, those of you watching live and maybe watching a replay. You're probably thinking, why haven't I heard of this before? Well, guess what? You probably seen it. It's usually presented as some type of snowballing debt, but we just take it to the next level, right? Probably one of those people who's saying, sounds too good to be true. If it sounded bad, would you want to do it? Would you want to do it if it sounded bad? If you're one of those people who are like, I need to see it to believe. Well, you know what? That's where you get an appointment, and you need to get us. We can look at your numbers and help you and show you the same thing we did for Markeisha and Jonathan, right? Is there a cost? There's absolutely no cost to meet with us. So that's why we're here giving you this information. So be sure to do that. So we're going to check out again, saran10k.com, Aaliyah10k.com, Carmen10k.com, and millionaireladiesmob@gmail.com. We are out.